All right, let's jump into it. Where we at? 10 past 11. All right, so look, I'll try and sort of power through this pretty quick because we've got Aussie employment data, which is pretty much the main focus of Asia session today, sort of coming up pretty soon. So nothing sort of superstar with it all. Basically, sort of look, we're looking at 20K. I mean, if anybody follows anything that I say, I always say they spam these 20K forecasts pretty much more often than not. And as you can see, 20, okay, went up to 30, 20, 20, 20, 20, 20. You get the point. It's not even that they spam 20, so they're just drastically wrong. 2.5 times, 3 times, 1.5 times, almost 3 times in the middle again, the mist to the downside. They're just notoriously off, and they always just throw out these 20K things. But anyway, look, we'll see how we go. 89, that was a bit of an outlier last month. That was, I mean, of course, where did they sort of put it? They put it at 20, of course they did. It came in at 89, which kind of makes up, I guess, balances out maybe this 52 that we had back in March for some reason. There's a massive drop off here. But point being is that and the unemployment rate is what we're really sort of focusing on. So I think, look, if it comes in at 20 or 30, 40,000 or so, it's still, I think, considered a beat kind of thing. This is a bit of an outlier number. It's most likely it's going to come down from something like this. But just because it comes down, this is an outlier. So it kind of skews what your perception might be of it all. But look, I've got really no idea what they're going to come in with, but just based on normal things, everything still seems to be ticking along. It, for the most part, seems to be keeping Aussie fairly well elevated, despite all other bits and pieces going on at the moment. So, maybe 30, 40,000, and we could just sort of see a bit of a tick on with it all. But I think the unemployment rate is the one really kind of got to be paying attention to because this has been very stagnant. As you can see, it's like, it ticked up here back in January, but apart from that, 4.1, 4.1, 4.1, all the way through. The actual is 4.1 every single time since back in January. So it's been, and actually even so, if you look at this going way, way, way back to March last year, so very stable. Again, stability, I think, is what sort of gives some sort of levels of confidence in the economy over here, despite the fact that we got the sort of predictions of rate cuts and that sort of coming up soon. Um, but if this does tick up, I think that's going to be more impactful for potential downside and weakening of Aussie dollar. So it was up until ridiculous. I think it was 130 went to bed, up at 4 to watch the FOMC, and then I think back to bed at maybe about 6:30 or something like that after the press conference, and then a bit of a wind down. So a very dotted amount of sort of sleep and that sort of around here. But on that note, though, of course, we had the big one overnight, which was FOMC. Which 4.5%, it was like heavily telegraphed that it was going to remain the same. I mean, they're not looking to cut. I mean, they're not looking to hike. And there was maybe a small outside chance that they'd sort of cut, but the general consensus was very much a hold, and obviously that's what they did. I think what what people were really looking forward to, as most things, is the press conference there, and to sort of see the tone in which sort of Powell sort of came out with. And I think again with this, everybody was like super like look, dovish outlook, sort of bullish on the idea that he was going to come out with this sort of dovish outlook, and he kind of threw water on it for the most part, really. Like I was watching it, I'm like, look, this doesn't sound overly like, hey, like it was very much more erring on the side of caution. And when you take their sort of current stance at the moment, where they're holding rates and they're like, oh, we're going to wait to see, that doesn't imply that, hey, look, things are pretty good and soon or possibly next, I think July is their next rate decision, that they're going to cut. And that's what the market has been really sort of pushing towards, the idea that US dollar is going to sort of like tank a little bit more because they're going to cut rates. But he kind of really threw the water on that. Normal sort of stuff in which we've got our dual mandate to sort of unemployment and inflation and that. And I think inflation's something that he was really sort of pressing as a bit of an issue with the sort of uncertainty around the sort of tariffs. And look, that's still there. It's kind of taken a bit of a backseat. Everyone's almost forgotten a little bit a bit about how, you know, life-altering these tariffs were supposedly going to be because of, you know, most recent things with the war and all that. We get that. But yeah, very much sort of erring on the side of caution is the feeling that I sort of got with it. And in that case, they kind of want to see more data come out, of course, which means that they're not about to pull the trigger. And he didn't even give any sort of guidance to sort of say that, hey, look, if we see this, at this, at this, at this, obviously he's not going to lay it out step by step. But generally, they could say, you know, if we see this stuff coming, if we see this stuff happening, then we would be prepared to play with the monetary policy. And that was not the case at all. He didn't sort of say anything along those lines. So to me, it kind of sort of feels like, well, kick the can down the road. And then I think October or something is the next one after this. I'm not 100% sure, but yeah, I don't. It to me didn't sound like they were about to cut and be sort of as dovish as a lot of the market were kind of sort of predicting them to be. So yeah, it'd be very interesting to sort of see how things happen. US dollar broke out, broke through a basically its year-long falling resistance, which it was sort of teasing with through yesterday's session, but obviously unable, waiting for a bit of confirmation to sort of get through there. It's gone through there now. It did sort of like consolidate around the top. I'm just watching it on another screen at the moment. It just had a quick little spike at 11 o'clock just to sort of see if it would get any sort of continuation, but you know, nothing as of yet. But certainly, I think that's quite significant, the fact that obviously it closed on the outside of that as well. I'll get to the chart in a moment. So after Aussie employment, look, we've got the Swiss bank looking to cut rates, and they're going down to zero. So I think that's yeah, pretty tough. Like I was watching sort of something, and like that, obviously with the US dollar weakening so much, Swiss franc being a bit more of a safe haven choice for people, particularly sort of along with yen and gold and US dollar, and it seems nobody's been buying US dollar. You know, gold's, you know, it's ticking along. Of course, I'll get to the charts in a moment as well. Um, you know, they've been piling more into, I guess, maybe into the yen a bit. Yen also seems a little bit weak. But the point is, I think the by default of safe haven then leaves Swiss franc. And Swiss franc's been sort of strengthening up. And not that I sort of necessarily cover it, but of course you've got to be aware of the other bits and pieces on the market. And for them, they're, as far as I'm aware, they're fairly heavily export in the sense of sort of like, you know, luxury goods like bags and watches and these kind of things. And of course, you know, as your currency strengthens, it hurts your imports because it costs people more money to buy your products. And this is why current sort of countries like and economies like sort of China, for instance, like to sort of, and in the past have, manipulate their currency to be artificially weaker to make them more attractive for sort of exports and that for people to sort of buy off them. So, you know, cutting the rates here obviously should have that effect to sort of weaken the currency a little bit, bring that down. That could be another sort of thing to pay attention to for US dollar in this instance, because, you know, again, look, it's the whole sort of Middle East situation still ticking along. We've sort of seen some interesting bits actually. I'll put it on one of these charts. I've got to update this as well. But which one was this? We're saying here, and you can see how the US dollar has responded to this war, particularly at the moment. Initial attacks, market bought it. Possible de-escalation, market sold it. You know, Trump says they may become involved. They bought it. Yesterday as well, I've got to update this one. I'll do it later. I won't do it now because I'm running out of time. But you know, we had the sort of a bit of sort of de-escalation sort of stuff, headlines sort of coming out overnight as well, and that pushed it down. So, you know, it is very much at the moment being impacted by what's happening over there, despite all sort of, you know, endless sort of bashing of the US dollar. You know, it is responding to this war a lot more than gold is. And that's what I was saying in the thing, yes, in the little analysis yesterday, that gold is just not responding as the textbook says it should be. So, you know, you got to think, where are those flows going? And this is the game. This is the point of it all. You've got to be able to pick where are the flows going, and why. It's not just that they're going to a certain area, but why are they going to that area? Because they can mean different things as well. But US dollar, with the DXY basically, if their economic data picks up a little bit, that's a tick. It's not terrible, but it's not great. So it's in the mid. So it's not bad. Call it that. So you get a half tick for that kind of thing. The idea that they're not cutting rates, well, that's a tick. And if we see a couple of these other sort of currencies sort of depreciate in that, and people still looking for safe havens, and it's responding to these escalations, that's another tick for it. So this is why you kind of got that breakout on US dollar. Which I'll get to in a moment, of course, as well. Then, of course, we've got BOE just after them as well. They're looking to hold. They do this sort of split, so give you a bit of an idea about how dovish they're sort of, I think it's sort of like neutral, so hold, cut, and then raise kind of thing. So it's just something a little different that the BOE does over there. We've got bank holidays in Japan. Jesus, I told you, a couple of hours sleep. In the US, this is like Juneteenth or whatever. What, maybe lower sort of volumes than that. We'll see how we go. As I say, with these bank holidays, they've got the ability to either really extend out and push some moves, but they've also got the ability to just be dead because there's no volume. So it's either nobody to combat the move, or it is just nobody buying or selling, and you get a bit of a stagnant sort of session. Not quite sure what the bank holiday in okay, some sort of New Zealand stuff. Okay, that's fine. All right, cool. So that's it for the data. We'll jump onto the charts. As I said, this is just the involvement here. Where are we on our main DXY chart? Is this one here? And look, this is the move that we've been sort of looking for. Look, this is the fifth. Again, look, I'm not an Elliott wave person, but of course we saw this flag break out from the other day. So to unpack this whole thing a little bit here. Excuse me. You've got 23%, oh, sorry, 38% pullback of this flag, broke up higher. That's great, we know that. This next leg here, this was the call I had yesterday, sort of back down here, the little arrow was sitting like this, came in here, buy stepped in on cue. Look, it's the top of this resistance level that we had marked out. Buyers bought it up, and they held it, and they held it, and they held it, and despite that sort of sell down around those headlines with find out what the headline actually was. Running on no sleep here. Basically, it was oh, that's right. Iran was happy to negotiate, which if I wasn't look, I'll probably continue this after the Aussie data. But realistically, this whole sort of stuff at the moment is just endless. Oh, they're going to do it. No, they're not. And then sort of like, Trump saying, yep, they want to come to the White House. That was the, that was the thing. They want to negotiate. They want to come to the White House. And sells it down, basically called that de-escalation. Then, we had the FOMC, and that's a result there. But, then you get on on X, and you've got Iran saying, no, we will never surrender to some wannabe or sort of past his prime warmonger or something like this. It's almost sort of comical that this is a level that people are at. I mean, they're dropping bombs on each other, going to war and that, and these guys are out there tweeting, throwing insults back and forth. But anyway, look, the point is it came back here, it held this support, and you got to think, okay, why? Because this is the resistance. It was resistance here. It popped through. Now you've got people sweating. You're like, oh shit, hold on, wait. And so what do? They sort of go, oh, I've got a chance to get out, and boom, and they buy it up from that line. So support resistance, it's the same thing. And they held it and held it and held it. And then, of course, we had that sort of slightly more, I'd say slightly more hawkish, but it's not really a hawkish, it's just less dovish response from Powell. And you can see that the market undenied did its normal sort of thing around here, like the report came out here, the rate decision, bang, sold down, bought back up. It always does this. I attribute this to people sort of positioning themselves just in case you get a shock. Doesn't happen, came in, they held, market expected them to hold, it goes doom, 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 and really moves nowhere. And then, of course, you have the press conference come out, the question time, and it's always one or two questions that really get it moving. and bang, 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 up we go. And so this is the big falling resistance that we are through because, despite it being extra scrappy down here, can't. So there you can see the significance of this line. So this is going back to February. Get a pinpoint here. Okay, no, we're not. This is going back to February. Bang, bang, bang. Even that big spike up sort of got it there. Oh no, this was the big spike up. That sort of got it here. This was a big move over here. And so you can see that 1, 2, 3, 4 touches. That's enough to sort of qualify this line as a line that the market's actually looking at. And obviously trading off because every time it's come into it, even this one here, they smashed into it after this big gap up here, bang into it. Now it's not only sort of gone through it, like it had its little rejection off, it's gone through it in a quick succession straight after. As you can see, boom, boom, and it's pushed through. So you want to see continuation of this. You want to see this one now. It is a little bit overbought on the 4 hour, but you want to see this push up here. First target is this price target up over here. This is the double bottom that we called, or I called on, when it was it, maybe the weekend or something. I called this on Monday, I can't remember. Somewhere around this area here, I said, look, we got a bit of a double bottom forming. Here's the measured move. Here's the move back up over here. One little push up here. I do think that even if it does get a push up here, it is still going to find some more sellers. Like, just from a structural standpoint, you get your breakout, that's fine, but you'll always, 9 out of 10 times, have a back test. And this is why, if we get a move back down to these levels over here, look for the buyers to step in. I mean, it could come in a little bit earlier. It could come in and reclaim, 98.8, which we know is that sort of super significant. That's the weekly level, 98.8. That's weekly supports. So you close the week above that, or you get a pullback here and then sort of a rocket launch up over this lot here, and you have a second attack on 99.2, that's when you're going to really get your breakout. Look, I'll put the actual sort of breakout, like this big sort of thing to signify a breakout candle in this alert here at 99.4 because it just clears the tops of these wicks over here. So I do expect a bit of a reaction probably on the body fill over here. So as I said, 99.19, 99.2, just for argument's sake. But a second effort through that level there, I don't think the wicks are going to hold it, but still it'll just give you that extra level of confirmation that we're going to see a bit of a change. So again, look, it could be a little bit of inverted head and shoulders. If we do get this play out, we've got to get this right shoulder. At the moment, it's charging through here. So let's see how this happens. Look, if we get this breakout, if you get this sort of move over here, then you go, okay, here's our move. Our target would be, the inverted head and shoulders, this kind of move here, whichever, whatever. And it gets up over to here. Well, that's starting to then validate the next move on the higher. So you step up one more level. And we go, okay, well, here's potential big double bottom. And this is where things get very interesting because a double bottom on this size is wrecking ball stuff. So this is something up here. That's 106. That's crazy. That's past the 61%, which we know is possible. That takes you up to pretty much these levels over here where we had bottom of this resistance here. And that is going to absolutely smash markets. It's going to smash Aussie. Gold's probably going to take a pretty heavy whack off this kind of stuff as well. Look, I'm not saying it's necessarily going to go here. Look, first of all, you got to get through these levels here. But as you build up, these are the kind of measured moves that you're going to start to see people talk about. And particularly once you get above 102, that's going to be some heavy squeezing. And as you can see, that's why this arrow is even bigger and pushing up the top over here. All right, so we've got 20 seconds till that data comes out. I'll be back in a sec. All right. So back again with the data now out. Has an update on this one here. 2.5. Oof, that's a shocker. That's an absolute shocker. But as I said, this is what they do. They spam 20K, 20 to 30K every month. It's got to be that. It's got to be that. It never is. They've just got no clue. Like it's not even ballpark kind of sort of stuff. But anyway, so look, pretty unchanged off the bat for Aussie. So look, unemployment rate still solid at 4.1%. As I said, I think this is a more impactful number at the moment. This they have no clue on, so I think I think even they disregard this. But 4.1%, I think that's the main one that they'll sort of look at. I'll jump back onto DXY in a moment. But as you can see, sort of Aussie, based off this, pretty much sort of unchanged, even almost a little bit sort of bullish off that kind of move. And I think this is more attributed to probably US dollar movements than anything else. As I've always sort of said that the US dollar sort of makes up the bulk of what will actually move us. The sort of local data is a bit more of a secondary in that, but obviously sort of with the employment numbers down, people are like, oh my God, you're shocking, but the unemployment rate is still solid, and hence you haven't seen this sort of go pew and sort of bucket right down like this. So yeah, what I mean, it's not all bad, because the unemployment rate's all right, and US dollar, if we sort of flick across to this very quickly and get onto a lower time frame, you can see that it sort of is moving up, but then it's stalling a little bit here. I'll put on a lower time frame here. So you can see it's sort of like is umming and ahhing. So this last little candle here, which is what, 5 minutes in now, that's umming and ahhing, a little bit negative, just on this one actual candle. That's held Aussie from sort of falling over. But I think if this flips and pushes through, which, you should probably feel it should. I mean, it's got a little bit of a base set up here. On this one here, this little zone. Let's stop this a bit. If this should sort of push through here, I think that is going to push Aussie back down to testing its main sort of supports, which are for 64.50 at the moment, and they're about 64.60. I'll get onto Aussie in a moment. So if we have a look, DXY here, as well as say, sort of like 38% pullbacks. It's broken through its falling resistance. It's consolidating out the top zone here. A breakthrough here could probably see a move up here. Another sort of reason I probably sort of think that maybe this would be into its last sort of push, and you may sort of see here, apart from the fact that this is a resistance zone, we can see that the market like to sell it down here. This will be your body fill completion. This is kind of, as I said, I'm not an Elliott wave kind of person, but this is 1, 2, 3, 4. This should be your fifth kind of wave up here. So, that makes sense. 1, 2, 3, 4, 5. Let it sort of do the correction through this period over here. And then if it sort of then comes back for the second move coming through here, that's when we could potentially see the breakout there. So look, I wouldn't be surprised if you do see a little bit more of a push through here. But of course, you got to trade these things as they happen. 11:37 now. We haven't got the volume in there to sort of push things at the moment. So yeah, look, we'll wait for the thing. Got the alert set if it breaks that zone up there, but I'd be very surprised if that was it. Like, you break through this falling resistance, you close and consolidate near the highs, and then you fall over. Who knows? I mean, this is what we sort of saw through yesterday, Asia. Asia, they just sold it straight the whole session. It was just mind-numbingly just called it the DXY dribble, and it was just down like this. Obviously found support and yada yada. I've covered all that sort of data and news and that sort of coming out. But at the moment, it's sort of popped up. It's put in a fresh high. It's consolidating around here. It's opened up and then pushed it a little bit higher. This alert goes off. You're looking up at 99.2, and then sort of see what the market does with it there. But I would say that's probably your sort of top side, at least through this session, and see what happens with the US session tonight, because obviously if they're closed, well, things could just be a little bit more dribble, 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 dribble. All right, I'll jump onto Aussie just because obviously we've just had that data there. And look, this got a bit of a spike up yesterday. Aussie has been incredibly frustrating trade. For some stupid reason, sometimes I get into these modes of like, yeah, okay. Like I even saying it now, but you've got to be honest with yourself. I'm an in-out trader. You know what I mean? I was shorting Aussie here, great profit here, held it back up. Oh, great. Bang, down here, profit, held it back up. And it just keeps undoing my position over and over and over again. And it's just frustrating as hell. But you know what I mean? Look, you never know these things, of course, but this is why I trade in and out, because I'll make money through here. I'll go off and I'll do something else with my day. You know what I mean? I'm not sort of like, oh no, it sucks. Ah, it's better. Oh no, it sucks. Ah, it's better. Oh no, it's so. It's an emotional roller coaster. Whereas you could have made money, gone off and done something else. You can make money again, even if you're still trading the same direction. You don't have to be trading both sides of this thing. But this is just incredible for in-out trading. This is not the whole environment, but we probably are coming to a conclusion, I would say. And given things at the moment, with the fact that the US dollar is negating the downside, the reasoning for a downside move, I think that's going to leave Aussie susceptible. If I jump onto the other chart that we have, which one am I using? I've got to clean these things up so I can be a bit quicker with the stuff, but there's this chart here. Yep, so this is the one that I've been trading off. The idea that we were sort of in this big wedge here on the 4 hour, which, look, I've seen people call it channels. I've seen all this sort of stuff, and it kind of, I think, where was it? I found something kind of could have been a channel if you just disregard this bit here, which you can. You know what I mean? Just because the market sort of it could have just overshot this sort of bit here, but I don't personally. I don't like that. I don't like things chopping through like that. There are times in which things can chop through, but it'd be more like that, as in the market's over here, and they've clearly, as soon as it's been over, sold back down into it. Here, they're not regarding this line here at all. And just because it didn't happen, that doesn't mean it can't sort of go up here. But to me, the fact that you've got 1, 2, 3 along this line over here seems more wedge-like than it does with the channel. Should it break above higher, I'd probably put this back in because that validates the idea of 1, 2, and maybe gives you a topside target. Should it go through the 65, 50, 60 area? But the fact that it's a rising wedge, it's rejected number of times from this 65 zone up around here. We're on our 7th week, unable to close above 65. You got US dollar not dying, so potentially squeezing. You've got the 61%, this orange line here, 61% of the retracement of the October drop down. And now you've got a little bit sort of weaker-ish Aussie data, like it wasn't sort of, as I said a second ago, and that, you still got unemployment at 4.1%, but, the job numbers coming down, it's not make or break. You can see the market didn't really move and react a great deal because of it. But, again, it's just another thing that you put in the camp of, okay, would the Fed rather cut or hold or raise based on this bit of data, that bit of data, blah, 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 and they build up the idea and they build up the camp of both sides of it all. The unemployment rate is probably heavier weighted than the jobs number because, as you can see, the jobs number was 80,000 last month and then minus 2,000 this month. I mean, minus 2,000 is kind of whatever. But anyway, point being is that that's quite a sort of fluctuating number. So I think they kind of even expect that to be a little bit flamboyant and all over the place. But the unemployment rate is the one that they mention, and they, like the Fed, have the dual mandate of full employment, which historically 4.1% is strong, very good employment. Yeah, that's holding it a little bit better. But should these things start to weaken a little bit more, you've got the RBA potentially staring down the barrel of some cuts. In theory, it all kind of leads to a weaker Aussie dollar. The only things I can sort of think at the moment were that obviously the data isn't shocking locally, and equity markets have still shown a very strong recovery from that April sell-off, which makes it obviously a bit of a risk-on environment, despite the idea that you got the war going on, despite the idea that that other Middle East things still going on as well. God, how they forget about this, and not to mention Ukraine. I mean, apparently that's still going as well. Not to trivialize these things, but as I said, you're not here for feelings. You're here for how the market reacts to things. And the quicker you can understand that how the market's going to react to something is the quicker that you can actually sort of adjust the trade position accordingly. So yeah, look, to me, it's still, I'm happy to stick with this sort of downside move. I think underneath this sort of 64.60, we'll start to see maybe a little bit more of a change in sort of attitude towards the Aussie. But all in all, it's still very strong. I mean, look, as we've seen, buyers moving up, buyers moving up, buyers moving up. We have seen this move of buyers. Let's clear some of this stuff up. This was the first time the last week, not that one, the last week or so, that we've seen the buyers actually relinquish. So they've been moving up with a perfect little base step up, step up, step up, step up. All of a sudden now they're not so keen to buy it at this level. Whereas they held it 3 times, they held it here, 3 times they held it here, twice, three, 4 times they held it here. Now they're just letting it slip a little bit. Still putting in new highs, but letting it slip again. They've kind of negated this idea of let's hold it at the 90s. Well, apart from the fact that they're kind of trying to hold it right now in this zone, but you know what I mean. Like, it's kind of they've slipped it down a little bit. So if we see this level break, which is underneath 64.60, you're probably running into supports pretty quickly. But the idea is then buyers are moving down, and you can see the shift in the trend and the attitude of where the market's happy to buy. It doesn't mean it's necessarily going to just plummet down, but you can see that while they were progressing and moving up and moving up and moving up, moving up, hold on, something's changing around here. Massive swings, massive back and forths. Every session or two, we're sort of going back and forth. What's this like? 1.5% for Aussie. That's a big, with large swings through here as well, of course, but you at least still had that progressive push from the buyers. Now you've got a sort of large swings at the top, while the buyers are kind of getting a little bit more cautious and thinking, hold on, wait, maybe we actually, if they do break this level here, that's where you're going to sort of see that call. They're starting to maybe push back here a little bit and sort of say, hey, look, maybe let's see what happens if it cools down and it moves back down along these lines like this. We'll see how we go. First things first, underneath 64.60 or 64.50, this kind of support through here, which we can see if we travel this back through over, where was it, over here? It's more or less been a bit of resistance, 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 resistance. So I think that'll be an important line for it to sort of get through there. But for the time being, it's still quite resilient. As I said, if the market squeezes US dollar, obviously DXY is against the other major currencies. Aussie is not going to be some magically way immune, particularly since they're looking to cut at the moment as well. So it's I'm still happy to stick with the downside outlook on Aussie just for failure to move forward. I think there's a room for it to pull back before they have another solid go. Gold, another one that's sort of just hanging in there. It had that big drop down and it's just been grinding along here, though we are seeing a little bit more of a bit of a sort of bearish dribble down. Like typically you won't see a flag that'll move like this. Like a bear flag would more typically sort of see more of a move like that. And that would be your bear flag. So the fact that it's like this is a little bit odd. Obviously they're trying to hold this zone here kind of thing. If I check on the other main chart that I was using, this is why they're holding this very crucially, in my opinion, because I think the ramifications of breaking down through this 60 area, which is what I called the other day, hence where this alert, look, it took it right to the tip, didn't quite actually go down through it. Once they break this, that's a rising wedge. You're coming off the negative divergence, which is on the daily. Yep, as you can see. I think it's got broader implications should they let this level go. And the thing with this is, particularly the only thing that I've really seen trade like this is Aussie, because when you see these things move, like I always had to cover with the stuff. Typically you've got we move up, we find resistance, we come back, we find support. It should involve this leg here, in theory. Even if it were to fail, that should be your way that it sort of fails with a lower high. So you got high, resistance, pulls back, attacks those levels, breaks through, cycle starts again, pull back, support, should have this leg here, which should either break through, double top, lower high. It should have that kind of setup. The only thing that I've seen that hasn't done this kind of thing is Aussie. And gold, as far as I'm aware, doesn't typically kind of trade like this, and not in my opinion. or in my experience, I should say. Gold, I would say, typically more does something to this sort of effect. Like it'll have a range like this. Maybe this is what it's doing now, and it's going to bounce and go up to the top. But it'll have a range, it'll fake out to one side and then accelerate to the top. So I think if this moves back out the top here, you've got a hold of this support, and you can justifiably see that last leg moving up into this area over here. Now, again, US dollar, if that breaks out, it's going to make it more difficult for gold to move to that top side there. I covered this earlier in the week that, despite all the ongoing pressures and everything with the war, they're not buying it. More threats, more bombs, they're not buying it. It's just consolidate. Look at this on a lower time frame. Look at this. Just these 20, $30 swings or something like this, but they're buying it from down the bottom here, that's fine, but they're not buying this thing up as they typically kind of, in theory should be. So get back onto the higher time frame. And as you can see, it's just slowly dribbling down, and it's pretty difficult to sort of find an actual solid line in which it's working. So just on that as well, just to show you what I mean with Aussie. So if we go back, like this is a bit of a history lesson with it all, but I'd say maybe this is what I was referencing. So yeah, I think this is the part here. So, with Aussie, you move up, you find resistance to the last little resistance, fine, you pull back, find support, you move up, you tackle the highs, you break through, okay, boom, new cycle should start. So you pull back here, or pull back to these highs, whatever, pull back to this high here, you should have this move here, but it never came, and it dripped down and down and down and down and down and down and down. So it kind of sort of stuffed with the whole thing, and Aussie just ripped out here. I think this is one. There's a lot of Aussie trades I've been smashed on, but I think that could have been one of the ones there. It was definitely coming down off the highs, and a similar sort of thing in this regard here as well. So same sort of thing, where you're going up, you structure wise, break up, you come back down, you come up, you tackle the high, you break through, you come back down, you find support, move up, you tackle the highs, you break through, come back down, find support. It should have had this leg here, but it didn't, and it just broke down here. I think this is probably a better representation of kind of what's happening with gold at the moment, because if you sort of see this move through here as it's pulling back, it's putting in these kind of like lower high things. And this is what I was saying, this is not typical at the flag. A flag typically will be sort of more this direction and then breaks that way. But you can see the similarities. And look, I'm not saying that this is going to happen, but to me, it's just sort of like this. We've got the initial sell down from the high, and then it's kind of like a odd shaped dribble down flag. And if we have a look at sort of what gold's doing right now as well. No, not that one. It's very sort of, in my opinion, oh, of course I can't find this now. Where are we? It's very sort of similar in that regard. Whereas, you've got the sell down, you've got the sell down here, and it's just these sort of like lower downs, little spikes out the bottom, but they buy it up. So it's more or less consolidating, but with a sort of bearish tone. Lower lows, lower highs. It's just it's a bit odd. And as I said, I saw this happening and I'm like, this is very reminiscent of Aussie. So obviously the big key is underneath this one here on the Aussie chart, underneath this sort of big spike down low before it gave its last big push up. Stand last big push up here, or maybe this is going to happen here. You break the low here, I think that's going to be it, because that'll take you outside the wedge, and it'll see a fairly similar move to this. Can we see anything in terms of measured move? Yeah, measured move, actually, let's take it from the high, let's do it right. from the high there. Look, it comes in about the same. But the point is, it's the leg from there is about similar to that. So if we were to apply this to this, it's not a massive drop off, but it gets you down to these sort of support levels over here. So probably around sort of 33, 24s. But the point is that once you get to this point here, you may see a rally. Like you could sort of get down here and then go, okay, yep, we're going to rally. But I think the mentality and everything else shifts because you've broken this wedge. Really, you're targeting 32.80, and I think people will just sell into rips from this point here. And that's how I'm going to play this. So I'm going to put a little sort of support just through here because this may provide a nice little backtest area should we break this setup here. So look, as I said, gold, this could definitely still come up here. Gold is very much a consolidate, break to the fake to the wrong side and then blow up to the other side. And structurally that would work. I'd take that as above sort of 34.80 that is going to happen. But as it is at the moment, that looks very similar to what we've seen with Aussie in the past. So we'll see how we go with this one here, but certainly I think underneath 33.60 is the way to go for this one. All right, on with the show. We got silver. So silver, I've been, let's get back to where we actually are at. This large triangle potentially forming here. Very resilient, buying up very strong, but this is very, I don't know, tricky, subtle, whatever. To have this big sort of wedge resistance carry all the way through to up here, a wedge inside a wedge kind of thing, so to speak. And it's 1, 2 times coming in around confluence of this sort of other zone that we had marked up here at 37.40, 37.50-ish kind of thing. And obviously markets going, yep, okay, let's sell that down here a little bit. Again, I think US dollar is the main driver of absolutely everything. At the moment, I think that's going to really, we're seeing it actually break through that zone, or at least attempt to break through that zone at the moment. Gold's coming under pressure. Aussie's also coming under pressure. You're seeing sort of silver move down here a little bit more. I think sort of you've got a little bit of support through this area here at 35.90. But really, as I've said the last couple of sessions, these are the areas that I'm interested in. Once it comes into contact with this rising support through here, I want to see, are the buyers going to go, yep, cool, on with the show, and move up over here? Because there is a high chance that you do, and it consolidates a bit through here. But if this really confirms, you've got 5 touches over here. If it confirms with a 4th touch over here, you can pretty much say, yeah, okay, market's respecting this, market's respecting this. That means they're respecting the wedge, and the wedge is a reversal sort of indicator. So I would say your time's limited. If you come down here and they drive it back up, I'd be getting out of any sort of long positions here because the wedge is coming to the tip. And once you break this, I think you're going to be coming back down over here. And I'd like to buy it at 31.70. I'm sure everybody would have liked, I would like to buy at 31.70 down here. But that's how I'm sort of seeing silver. So yeah, I think sort of some short-term downside. I think it'll be somewhat limited, but I would say even if you do get this pushback up over here, I'd be getting out of any long positions, and I'll probably be looking to short some positions here, similar to how I was shorting over here and caught that move. So I think there's too many people calling 40, 50, 60, 70 bucks on or whatever on silver. They forget that, those price targets and these textbook technical sort of setups that they've got are, based on sort of, 10 or 20 years. Like, I'm buying silver, it's got to go to 60 bucks. Yeah, good on you, mate. All right, I'll see you sort of 2050. We'll see how we go. Anyway, I think there's probably some downside on this one. I could be wrong. I mean, of course. Fly along, we got copper. Copper actually sort of, again, still quite resilient, but, boring, really. A little bit of an inverted head and shoulders here. Should have want to sort of move up over the top over here. Given everything, still don't think it is. I'm still looking for a downside move. Test of this little rising support is what's interesting me. The fact that it broke through this is, interesting. I think topside, you're still going to be capped at this 496. But I think sort of, this is probably your downside. This, if anything, I'd be looking for a downside move, which I'm not. I'd be waiting for more reaction to see, because I think buyers will step back in at 468, and you may get some sort of bounce up there. And China. testing outside its box. And this is what I've been saying. This is why it's important to pay attention to these charts as well, particularly if you're trading Aussie and gold, because it does have an impact on it. And as you can see, it's in its little range. It's always in its little grind. It's testing out the top side here. I would say you're probably looking to pop and come out the top side here. Should it pop out here, we're looking at 722. You will see some sort of reaction. I'm going to say this time it's going to do this. And then sort of come up, project back down and support here. I thought this was going to be the time for it to do it. I was wrong. It came all the way back down here and then decided to consolidate the bottom side over here. That's fine, whatever. I think this is the time for it to do it. Should we get a pop out of this zone here, I think you move towards 722. You may see some grind around here, but I think that's inevitably moving to 725, and that if we see continued US dollar buying across the board. Just on that note as well, flick back to there, and as you can see, we've got this little breakout of that zone here now. So they are continuing with this push that we sort of saw overnight. They and ahed about it, but they have seen the continued push up the top here. So we'll see what happens at 99.2. Finally, just finish off with gold-silver ratio, and as you can see, it is holding this. Let's get up to a better time. You got to do this on at least minimum 4 hour. It is holding the zone down the bottom over here, but you know, gold is not being bought. It's actually sort of selling down in the immediate, just as we're sort of seeing this as well. So I think that look, I don't really have so much of an opinion about what it will do here. It is support, well, it is previous resistance levels around these 91s. I think any breakdown down under here will sort of see it. We'll see sort of some support come in along this big sort of rising support came through here. I did put I put up a chart the other day on this, and it negated it completely. Didn't obviously just chop straight through it, so it doesn't really give two shits about that one. So that's fine. We can get rid of that. But yeah, look, for now it seems to be holding here. I think if it does break down here, you might see that little push up on silver, but again, I think things will be moving back up to the top side over here. Typically, as things are moving down, you're getting more of a metals bull market because silver outplays gold in those kind of typical scenario. So, you know, it is pulling back down here, but yeah, we'll see how this goes. But potentially, I just see some consolidation around this area here. All right, that's it from me.